Thanks for joining, everyone. Let's get started here. Got Matt Hoppe here from Stearns, and today we're going to kind of go through the home buying process, answer some of your questions, and kind of like run you through the whole process from the lending to the real estate search. Oh, and by the way, I'm Tom Campone. I'm with Keller Williams, Lincoln Park here in Chicago. With that, I'm going to introduce Matt here.
Hey everyone, yeah, as Tom said, thanks so much for joining us, everybody. We're excited to give you the information and help get your feet wet with the entire process from start to finish. So I'm Matt Hoppe, work with Stearns Lending right here in Chicago. I've been in the business a long time, like 18 years now, so kind of been through the ringer for everything. And really like one of the very first steps in the process, a lot of people say like the very first step that you should be looking at is to get your pre-approval done. And that's really a part of the process where I come in for the lending side. And really the main point of that is to, make sure that you're 100% set to go for the loan that you're going to need for the financing. Because unless you're fortunate enough to be able to pay cash for something, not too many people are in that boat. You're going to need some type of loan and financing for the purchase. So the pre-approval process it's really pretty simple for the most part. We set up a time to get together. These days, obviously over the phone. Certainly do it in my office or meet anywhere during kind of normal non-pandemic times. But really, just simply have a conversation about your goals. How much of a home you want to buy, what you want to put down for down payment. Goals for monthly payments, just all those types of things for how much you want to buy. And then we kind of start getting into your information. We check the credit, we check income information, check asset information, and really from the lending standpoint, just make sure that, when it's go time and when you and Tom find a place that you want to proceed with and put an offer on, make sure you're all set to go with the loan that you're going to need. So
Matt, can I hop in real quick? So
yeah, go ahead.
From the real estate search perspective, the reason that the pre-approval is so important is because when you find the property you want, you're going to need to include that pre-approval letter with your offer so that the sellers know you're serious. So what happens a lot of times is people think, oh, this is going to take me 6 months or 3 months to find a house, or I'm not ready yet. And then, they end up seeing something online that's like the perfect fit. And then they rush, they go see it, and they're like, I'm ready to go, but you don't have a pre-approval. So from a seller's perspective, if you don't show up with a pre-approval, they really don't take your offer seriously. So it's really important you get out in front of that. And Matt, give people an idea of like how long is a pre-approval good for?
Usually the entire pre-approval, once you get it done, depending on circumstances, sometimes I can knock it out in 30 minutes. It's very easy. Sometimes if people are self-employed, for example, and you have to run through tax returns, then it can take a little bit of time. But in terms of the timing for how long it's good for, there's technically an expiration date on it of 120 days. And really that's only because credit reports expire after 120 days. So once we do it, if you don't close on a place in that time frame, we just simply go ahead, we recheck the credit, make sure everything is done everything is the same for your job and income perspective. And it's a matter of getting it updated in maybe 5 minutes. So there technically is an expiration date, but it's very quick and easy to get it updated too. And to Tom's point too, with the process, it's going to give not only Tom, but also the seller the confidence that they need to accept your offer, to take their home off the market, to move forward on yours. And, for you with the pre-approval, we're going to give you information on payments, on loan amounts, purchase prices, all those numbers that you're going to need to really focus in on your search. So if you want to look at a place in the $300,000 range, for example, we're going to put numbers and examples together to get you prepared for that. So you have a good idea on what payments are going to look like. Same thing if you're looking up to for a place up to $1 million. Same thing. We give you all the information so that you're going to be prepared to get out there and have confidence with your home search. So it's really not too difficult. And then once I'm done with the pre-approval process, I send you off to Tom, and that's kind of when the fun part starts. You actually get to go look at some properties with him.
So I always joke with people
So
and
yeah,
say, "Oh, sorry, Matt. Go ahead."
I was just gonna say, so yeah, it's really quick and easy, and you know, if somebody has a, you know, it's like kind of an outside the box situation, you know, at that point we'll actually have underwriting take a look at the pre-approval too, just to make sure that everything's set to go. You know, we certainly don't want any surprises, you know, once you get out there, so we make sure everything's knocked out and ready to go from the very beginning.
I was gonna say, I always joke, Matt always does the hard part, and I get to do the fun part. So once
Yeah,
you're done with Matt, then it's time to once you have the pre-approval, it's time to like get out and shop. So I got a pretty like specific process that we kind of run through when you're looking for your new home. So we're really gonna try to focus in as much as we can on like the areas you really want, and we're really looking for 5 to 10 properties that fit everything you want. So we may look at 100 or 200 online, but we're trying to get anything that's a maybe or that has some characteristic that, you know, makes it a maybe for you. We're going to just totally knock out of the equation, and we're really going to try to focus on those 5 to 10. So what that does for us, that gives us a great snapshot of everything that's available in your price range, and it allows us to go see all of those properties in one day. So I've got a pretty specific strategy on how we can go see all those properties without, you know, having them all blend together. But the idea is to spend one day and go see everything in your price range so that you can really benchmark all the properties against one another. And inevitably, if we go see that many properties, there's going to be one or two that are a cut above the rest. So at that point, you'll have your pre-approval. You'll have seen everything in your price range that's really like, you know, an A property, and you'll be in a great position to know that, you know, feel like you have the data to potentially move forward. Because the worst case scenario is we go see 3 properties on this Saturday, 3 properties on the next Saturday, 3 properties on the following Saturday, and then you realize, oh my God, it's the one on the first weekend that I love. And then we go to find out that it's under contract. And then the rest of this process, you're spent agonizing and agonizing how you lost on that property, and that nothing will ever compare. And then everything else we're looking at, you're thinking about the old property. So at least on the first day we go out, we try to see a large amount of properties. Like I said, 5 to 10 that all fit everything you're looking for on paper. And that way you're going to be able to really start to see value on which properties are good value versus which properties look great on paper, but, you know, when you walk in, they're not really that special.
exactly. The last thing I was going to mention too regarding the pre-approval process is just kind of a quick overview of what we're looking at too to make sure you're pre-approved and qualified for the financing. So it's kind of what's known as the 4 C's of underwriting. So the first one is credit. You know, everyone knows that credit is obviously a big factor. The higher the score, the better. And really in many cases, your actual credit score is going to almost guide you towards which program is going to fit for you best. So credit is the first one. The second one is capital. Capital just simply describes the assets you have for the down payment. You know, if you're a first-time home buyer, you know, and if you have even above average credit, you're going to be able to qualify for the minimum down payment, which for a conventional loan is only 3%. So that would be the minimum for capital. And then some people make up to, you know, 20% of a down payment is kind of almost like a rule of thumb, but you certainly do not have to make that much. And then some people even go higher, you know, depending on how comfortable they are with putting that down. The other one is capacity. And capacity just simply describes your ability to make the payments and really the budgeting of the loan. So it's a ratio we run with somebody's total monthly gross income versus their total debts, and you just have to keep those numbers within certain certain parameters. And then the last one is collateral, and that's just simply the actual property that you're going to buy. You know, whether it's a single family home, a condo, you know, a multi-unit, you know, from a 2 to a 4 unit. That's going to be the collateral for the loan that you need to have within some certain parameters too. And then there's just a couple. One of the last things I like to go over is just a couple of common misconceptions with underwriting and just with the lending process itself. You know, there's always you'll hear things on the news and the media a lot of times. A lot of it's really overstated, in my opinion. I mean, one of the biggest ones is that a lot of people think that underwriting is just impossible. Even these days with, things are tighter than certainly than they were 10 years ago. But even these days, as long as somebody has decent credit, if you can afford the home you're going to buy, if you have a little bit of money for a down payment, you're going to get approved and things are going to fly through without any problems. A lot of people get worried to the point that they don't even want to try because of some of these, misconceptions, that they hear of. Another is regarding gifts. If someone's fortunate enough to have a family member give them some money for a down payment, you can 100% use gifts to make that payment. A lot of people I talk to think that you're not able to do that, and that's certainly fine. A third one is regarding having a 20% down payment. As I mentioned a minute ago, 20% is kind of the old school rule of thumb, if you will. But for a first-time buyer, with a conventional loan, for example, you can get away with only 3%. FHA is only 3.5%, even up to a 4-unit property. You can buy a $600,000 4-unit property and still make only 3.5% down with FHA. The last one is regarding co-signers. Co-signers in most cases are always allowed to. So just like an auto loan, many people have co-signers when they're younger. You can always get a co-signer. And then the last one is regarding credit. A lot of people think that you have to have just this absolutely pristine credit profile to get qualified. But that's certainly not the case. In many cases now, like for some types of loans, you can get away with only a 620 credit score, which is really quite a bit below average. But there are wide ranges of options and wide ranges of programs really to fit most people. So, like I said from the beginning, if someone has decent credit, if you can properly afford the home that you're looking to buy, things are usually going to be just fine. You're going to be able to get approved.
Once you get the pre-approval, we write the offer. Me and my team will basically handle everything. So there's a bunch of steps after we write the offer. We'll get the property inspected. We'll go through attorney review. We will negotiate credits on anything that are found. And then we'll work hand in hand. Matt will mostly work in the background to get your loan approved once we have the contract in hand. But you'll really be hearing a lot from me throughout the process once we find that right property, negotiate a price, and then go through the process of inspection, attorney review, all those kind of things. So Matt really works a lot on the front end, and I work more in the middle part, and then Matt closes it out with funding the loan. So it's really a team approach, and I think it's important to have a team go through this. So Matt's a great partner. I've got partners for inspectors. I got partners for attorneys, but I think it's important to find a team, because those are the people that will give you the best amount of, they will give you the best service. They know how people communicate together, and it will be really like a streamlined approach versus going with like a one-off type of, kind of piecing it together.
Yeah. And another point too, and just in regards to the process itself and really the timing of the process, from the very point that you get your pre-approval done, some people find that perfect home they like the very first time they go out. And other times it takes people, a few weeks, even a few months to find that right place. So that's really going to be determined by you. But then from the time you get that contract until the time you get to closing, that's going to be, usually on the front end or on the quick end, probably like 3 weeks is like a relatively quick turn time for that. And then sometimes, I'd say like 35, 40 days is maybe an average. And then every once in a while, you'll have someone that they don't want to close for like 2 months and you're like 60, 70 days out. But usually, usually 30 to 45 days is a pretty good average for, from the time you get that contract until the time you're closing.
Yeah, I think that's a good rule of thumb. I mean, most of my deals are in that same boat. 35 to 45 days is kind of the wheelhouse when most people are looking to go from contract to the actual closing table. So anything else you want to cover tonight, Matt?
I think I'm pretty good. I think we covered really just the basics. I mean, so much of this process, especially so much of the pre-approval process is really geared on every individual and their goals and what they want to get out of it, and how their credit is, how their income is. So so much, you can only cover so much now, but I think that's a good overview. to give everyone just kind of get their feet wet with the initial parts of the process and really where to start in their journey to buying a home.
Yeah, I would agree. I would say our process is pretty tailored too. So we've got a great, structure and process to work through it, but we also tailor it to everyone's individual needs. So it just depends on what people need. But I think we're both in the same boat where we like to take that like tailored approach to just help people no matter where they are, as far as knowledge base or, even their needs. So
Yeah, unless you have anything else to add, I mean, I think that really covers it. So definitely thank everyone for coming.
yeah,
Feel
absolutely.
free to
I think
reach out to either Tom or I if you have any questions, and we'd love to help answer any questions and help make sure you're all set to take those first steps.
Yeah, I appreciate you joining me here tonight, Matt. And I would agree. If anyone has any other further questions, feel free to drop us a link. Shoot us an email or give us a call, and we're more than happy to answer your questions and get you off on the right start. So thanks for joining tonight, and we look forward to hearing from you soon.
Yeah, thanks everybody.
Thanks, guys.